after 3 days or 4 days, right? So we call them accrued expenses. And then current maturities of long-term debt. What does it mean? It is the current portion of long-term debt the company have to pay within the next year. So you loan from a bank 1 million and you said to them that every year you will retire $100,000 every year, right? So in that case, you will complete the payments in 10 years, right? So current portion, for example, this is $1 million, and this year, how much is payable? 100,000. So that becomes your current liabilities, and 900,000 will become your long-term liability, right? Any question? Everyone, any question? Okay, let's move forward. The long-term liabilities. So long-term liabilities are the debts due 1 year or company's normal operating cycle if longer than 1 year. Similarly, if the payment is going to be for more than 12 months, that will become your long-term liability. So it includes the long-term notes payable or bonds payable. Long-term notes payable, it's like that you purchase raw material from a supplier and you say that we are not going to pay you this year, we are going to pay you next year. But what we can do, we can give you 10% interest. So you take out your business letter, and on the letterhead, for example, XYZ company, and you say that $1 million is payable at the rate of 10%. Total amount going to be 1.1 million, and date is, for example, 1st January next year. So you issue a note, and that is a legally challengeable note because it is issued on your company's letterhead. Bonds payable, these are these are similarly like that, but these are a call for capital from the public in terms of loan. You can ask loan from bank. You can also ask loan from the public. When you ask loan from the public, you issue bonds. For example, one certificate is of $1,000. You need $1 million. You will issue 1,000 this kind of certificates. 1,000 will be written on the certificate, and it will be showing that okay, interest gonna be given to you twice a year. On which dates? 15th of June and 15th of December, and for 5 years. So whoever purchased, if I have 2 certificates, it means I have invested $2,000, right? So this is the call for loan from the public. And if we ask loan from the bank, then that would be a bank loan, that's it. So everybody understand this long-term liability? Jordan, Min?
Yes, sir. Yeah.
Yes.
It's like what you own and you don't have to pay it immediately though, right? It's like more than 1 year.
You don't have to pay what?
Basically, it's like what you owe, right? It's like your debts beyond 1 year, right?
Yes, you're right. Okay, now this is the liability sides of GAAP incorporation. See here, current liabilities, you see current maturities of long-term debt, accounts payable, accrued expenses, and other liabilities. These are accrued, which means expense occurred but you didn't pay yet. Maybe includes salaries or some other liabilities as well. Income tax payable, right? You didn't pay that. The long-term liabilities, you see long-term debt. Other long-term liabilities, we have this much. Now, you tell me liabilities has increased from approximately 3,000 to 4,667. It's good or bad?
I think it's good.
You think it's good?
Yeah.
Why? Why?
Because if you see the year 2011, there how to say liability is it's not good. No, it's not good.
You said it's bad.
Yeah, it's bad.
Okay. Why bad?
It's bad, because liability is going out for the outsider, and in 2011 was 2,985, and this and 2012 4,607 67. So that's mean how to say higher than last year.
Yes, you're right. In one case, you're right. It's bad. Any other who wants to comment on this one? Guys, I like your conversation.
I also think it's bad, but I think it didn't got like too bad. Like it's like almost same as last year, because last year long-term debt wasn't included, but this year long-term debt has included.
You said it's bad, right?
Yes.
But you explore one thing. Very nice. You explore this, or you find out this stuff. Very nice.
Oh, yes, true.
Any other who wants to comment? Okay, let's
So
talk.
this means that
Yes.
this year you have to pay the long-term debt, right? 1,606.
No, it's a long-term debt. It means you loan from the bank is 1
Oh,
billion.
you took it this year. Okay.
Right?
Okay.
So this much you have to pay within the year. Okay, let's talk about
Is there a month that we have to pay the long-term liabilities? It is fixed or it is different from company to company?
I didn't get your point.
So is there any month that we should pay the long-term liability?
That is the comment notes. If we explore that one, that we find out every company has its own arrangement that we will give you, after the 3 years or 4 years. We don't know about that whether this loan is for 4 year or 5 year, unless we go to their details. You see, notes 10 or 12, 14. You go and read that, and you find out that how we are going to retire this loan. Every company has its own policy,
Okay.
right? Okay, now this is good or bad. If we just ignore all this stuff and we base our argument that our liabilities have increased, and we definitely say that it's bad. Why? Because look at this, assets is equal to liabilities plus owner's equity. If liabilities are increasing, it means this business is going out of our hands. More portion is going to be for outsiders claim, right? But if we look at this information that Junpyo pointed out here, so this year, why our liabilities, total liabilities increased? Because we took a very hefty loan, which is $1.6 billion loan. Now we'll go and we see the reason of asking this loan. Maybe in the reason we find out that this is for business expansion. They are expanding their business in Africa, or maybe they are expanding their business in China, or in South Pacific countries, or in Europe. If you find this information, this is good, right? So it depends. Having a good, having a large portion of liabilities, it's good or bad? It depends. Why? Because you need to find out the sources of liabilities, whether the debt is increased or decreased with some kind of purpose or not. If they have written that we are having some trouble to pay the salaries, we don't have that much cash right now, so we ask loan from the bank to pay salaries, then you can say that it is bad, very bad in fact, because you don't have that cash to pay to the employees' salaries. And then you say that this company is going to be doomed in coming days because more of the loan portion, more of the liabilities portion is going to be increased. And those those who want to receive money from this company, they'll go to the court and they'll say that, look, this company is going crazy. We are filing bankruptcy. Please, court, help us to dissolve this company. Everybody understand that?
Yeah.
Okay, now owners' equity or stockholders' equity. So it represents.
Would wait, I'm sorry. If you take on $1.5 billion in debt, right? Would
Mhm.
that money appear somewhere else, like in assets later on?
No.
No, it would just stay there in the debt, right?
Yep. It will stay here, and how it is decreased current maturities of long-term debt. So this year, from here. So how much in total they bought the loan? 5, 6, 6, this one. And this year, at the end of the year, they retire 59 million. Next year, maybe they retire something. So this